Now, you've built 8 businesses. You've never had a business fail. Not one.
To date, no.
You've transacted over $6 billion in property, thousands of clients, and built one of the largest commercial property agencies here in Australia. What's the greatest risk of trying to build a portfolio like this?
People are not planning for the dark time as much as they should. When the economy turns, the first thing banks do is reduce leverage, and you don't want to be caught off guard.
What is a boring business, and why is it a better bet for making money?
The unicorns don't come up often. There's more opportunities in the boring accounting business or the pool shop, the things that everyday people need, rather than trying to create a new app or online product that may never work. Everyone knows solar panels, but they think of it from a residential point of view. So what we've done is, we've got access to these roofs. You just put a big solar panel on, maybe some battery storage to kind of cover the downtime overnight, and then charge direct to the tenant. It's like decentralizing the power system.
God, that's genius, man. Because a lot of people are trying to figure out how they get out of the middle class and how they can start compounding wealth for that next stage of wealth building.
You just got to take more and more risk, really. So the risk I took was...
This episode is brought to you by Wix Studio. Here at the Agency Podcast, we're building a community and we would love for you guys to be a part of it. So we would love to hear from you. What are you enjoying the most? What would you like to see more of? And what do you think might be missing? Drop a comment, make sure you subscribe. And now, on with the show. Scott, welcome to the Agency Podcast.
Good to be here.
Excited to have you, man. It's been a long time coming and it's been fun watching you build what now looks like an empire at a distance. And I know you've said that it's been a slow burn at the start, but now it's really starting to, I guess, have that hockey stick trajectory.
Yeah, no, slow start. Couple of years we didn't even make money as a business, but then the last 5 years it's kind of just upward trajectory type stuff. And yeah, it's not getting easier because there's more things happening, but in a way it feels a little bit easier. So at least in terms of profits and I guess assumed growth rates, it's everything's starting to click at the moment.
Did you always know you were going to be an entrepreneur?
Oh, definitely not. No, I was doing the whole corporate dream thing. I was in Port Macquarie, I was chasing, pay increases, and there was a really good manager role up in Port Macquarie. It was like a mid-north coast in New South Wales role, and the CEO at the time, who was he's one of the longest-standing ASX-listed CEOs at the time. He was making tens of millions a year. He had the Point Piper mansion paid off. He was traveling every 3 or 4 days on a plane. He was an old, tired guy, and he basically said, I cost my relationships to a degree with my kids and my wife, and I just thought that doesn't sound as sexy as I thought it did. And all of a sudden, all that money, he's not even at that home. So what's it matter?
Right.
You could literally say most of the money you earned was not relevant.
What was the epiphany you had where you realized that you needed to go all in essentially on changing your strategy?
It was probably a couple of years before I started the business. I was I was really heavily involved in residential at the time. So I was buying unit blocks, strata titling them. There was a point over a 6-month period where I was making 4 times my salary with about 6 to 7 hours of work a week in investing. So, and then here I'm smashing myself 60 hours a week in the corporate game. It just didn't, the math wasn't mathing really. It was just so much easier to make money at that time, leveraging into a growth asset and then tinkering it with value adds than, copying a salary and paying 49% tax.
And you've talked about this where there's kind of this popular notion that if you're going to build a property business, just try to get 50 houses that are negatively geared, and it'll all come out in the wash, and essentially you'll build a portfolio of wealth. What's the greatest risk of trying to build a portfolio like this?
Well, it's a house of cards, really. So if you own 50 houses, so some real rough math on this, $750,000 house, which is roughly what they're targeting at the moment, you're going to lose 10 to 15 grand cash flow, assuming there's a 20% cash deposit. A lot of them are doing 90% lend. So either way, imagine you just say, I'm going to take a 15 grand less salary this year. That's fine for 1 or 2. Why would you buy 10 of these? That's 150 grand negative you've got to make up somewhere else. That starts to become a really difficult situation. And a lot of people are doing it. There's people in the industry buying 100 of these things, but they're propped up by very good businesses. They're using that as a marketing tool to say, look, I've got 100 properties. Come join me. I'm a great investor. But then they're spruiking the same deal for their clients and they're not in the same position.
Right.
It's just so risky. And you watch when the economy turns, the first thing banks do is reduce leverage, and I saw it in 2010 when I was starting to invest. There was an investor quite a well-known guy, and he was buying a lot in like South Brisbane, and he had about 300 properties. And these were townhouses, units, houses, all negatively geared, but he had enough from his business to kind of keep it going. But first thing when the subprime crisis happened was the banks reduced exposure, and he was with CBA. I was talking to him at the time. He lost 70% of his properties that year because he had to sell out, and it was fire sale. So all these like assumed equity positions that he had in spreadsheets all of a sudden were 20% down, 30% down. It's just a classic didn't carry the cash flow through a dark time, and people are not planning for the dark time as much as they should because they're assuming it's going to keep going nicely. And it might go for 5 years and happy days if it does. But at some point, you just got to assume bank policies will tighten and you don't want to be caught off guard.
In the Australian ecosystem, it certainly seems like in order to get ahead in business, you should be parking a significant amount of your wealth in property to then leverage that back into your business. Do you think that we're playing this game of a monopoly to try to create a fugazi in Australia to build wealth, whereas actual wealth is a completely different practice?
That's a great argument. And, one of the things about building a business in Australia is it's very difficult. Like it's hard to capital raise. It's hard to generate any investors to get interested in a business that's not their own. But property, it's a sure thing. Let's go it. And it's an unproductive asset. We've got some of the highest prices in the country. And I'm a property guy. I'm saying this, but it's like a political thing. Like you keep it going, and it kind of wins votes. The more population, immigrants they let in, it sort of boosts. Like that's why we've got record tight vacancy rates. There's 1 million extra people in the country haven't caught up with building because it's so taxed, it's so expensive. So yeah, it's an interesting scenario we're in. I don't know how we'll get out of it, but yeah, I'm with you. Like the Silicon Valleys of the world. Like if they had a bit more of that culture in Australia, there might be more productive wealth getting created, but there is definitely passive wealth getting created. And that's why the baby boomers are all, as a group, loaded per capita. And yeah, if you're not in property, you've been left behind.
Something I want to touch on before we move too far ahead into, I guess, strategy, which we want to dive into today, is that you've transacted over $6 billion in property for thousands of clients and built one of the largest commercial property agencies here in Australia. You said all of it started when you watched your father lose money in property post GFC. Can you take us into that and what you experienced with your father?
Yeah, so we were a classic family at the time where, he was a salary worker, had a good job, financial controller, and he used that money and invested locally. That's what everyone did at the time. And that went pretty well. Like he did quite well. And then where it sort of got unstuck was when the GFC happened and he started investing in a couple of mining towns at that time, and they went absolutely pear-shaped. I remember he bought 3 properties for $750 each, and within 2 months you couldn't sell them for $200 each.
What exactly happened with the mining towns?
That was in Moranbah. So Moranbah was a gas mining town, and they were renting these 750 properties, 750,000 were renting for about $2,500 a week. So he recognized that, I need to turn the cash flow scenario around. And this is before everyone knew mining towns are risky. So hindsight's a wonderful thing, but I guess
then it seemed promising, right?
Yeah, because the mines had, big businesses backing them, and they weren't investing in properties at the time. And I guess where things kind of really took a sharp turn was when I guess a lot of the projects started closing and going into from construction phase into production phase. So maybe they need a fifth less workforce there. And then there was a slowdown in the economy. Everything happened at once. And banks then turned the screws on investors. And there's a couple of famous stories where like some bought 10 odd properties in Karratha. Like it happened everywhere, and they all halved in value overnight. And they were basically bankrupt, these investors. So
we're talking about like tens of thousands of homes across the nation that just halved in value almost overnight. And the entire workforce essentially halved. And then
there's been different variations of this. Like I look at like what's happening in the Gold Coast at the moment. Like before that crash, there was a unit crash in the Gold Coast where there was too much supply and prices got high, and a lot of baby boomers were speculating on units in the Gold Coast. And it's funny, like people without long memories or don't read history, like it's all happening again up there because they're just building, prices are sky high. Do the local incomes actually support those prices? That's the question.
Yeah.
In many cases, no. Like I've heard, properties triple in value in 5 years' time. Like yeah, I don't know if the chickens have come home to roost there yet, but you can see pockets of risk around the country, but overall, things are still kind of coasting.
My grandfather. Now, one thing about your parents, like what belief about money did you inherit from your parents or your father that you've, I guess, had to completely unlearn?
So one thing I've got to thank my father for, like in terms of business, is he was the ultimate pessimist. So, you'd get excited about something and it was like, yeah, no, terrible idea, shit, that's not going to work. And, it was good advice because like, it's funny, when you're driving along the street and you see, a certain type of business, like instantly in my head, I feel like I know if they're going to succeed or not. Just through, I guess, speaking about it from such an early age, seeing so many foreclosures over the years, like, certain types of restaurants or, certain types of, retail businesses, you think, oh, they're a goner, but yeah, someone is thinking that I can invest money and put my whole life into that. Why didn't they think about that? It's such a low percentage play. Yes, some can work, but just thinking negatively that businesses will fail and they do, just don't be involved in those types. Just go for the ones that make sense. And there's plenty of those, but there's just so many that people just keep trying and they're popping these things up, and then 3 years later, they burn out. Like it's a hard game for not much upside.
So when you're thinking about the sheer cliff of like failure that people are faced with in business, what is it that people are missing? Like, what are they not seeing?
I think people get excited. Like again, when I was in Port Macquarie, this is way before I was in business. Like one of my employees at the time, his wife bought a Video Easy store. It's really easy to think this in hindsight, but like, I remember just the first question was like, oh, that street, how much rent are you paying? It was like, 6 figures in rent. I'm thinking like, how many videos is like, where's the money? And how many staff? Like, it turned out like the only way to make a profit was that lady working 7 days a week. And you just think, well, wouldn't it be easy just taking a salary job somewhere else and then not investing? And they bought that business too. So it was a, 300 grand negative start because you have to buy all this, everything. And then it's the stock take. So there's money invested forever. And, we all know what happened to video stores. It's just, there's 1,000 variations of that out there as well, where you think like, yeah, I don't know. Not everyone needs to be an entrepreneur, and the old bricks and mortar shop front in many areas is slowing up and dying. But there's, new things popping up all the time, like, health and wellness. And you see these things like some gyms are doing incredibly well, like the high end stuff can really work. But yeah, you just got to really be, ahead of the ball game. And that's, yeah, you kind of just, it's easier said than done.
When you think about these people that are buying the flashy new thing, what is the risk of that play? And why do you think so many people fall in the trap of like jumping in the next wave business without looking at the numbers or looking under the hood? Like is what I feel like you're talking about at this point.
Whenever you invest with the crowd, you're going to pay more for certain things. Like let's go back a few years ago. Everyone wanted a crypto business, without really understanding the fundamentals. It was a new sexy industry with huge upside because we heard some people made billions of dollars in it overseas. But again, like this is where I sort of kind of default to more of a boring or stable way of doing a business. Like I rather just know I'm going to make money, even if it's, a little bit more than you think. Like, but I don't like the idea of just making no money. Hopefully you create a unicorn at the end of it. And, the unicorns don't come up often. Like if you're the 1 in 100, good luck to you. But you like to be that like rare person, it's a lot to risk. And, time is money, your reputation, something. And then it's not just time, you're putting money into it as well. And every year you don't make money, I think like, compounding interest as an investor, like you want to keep putting stuff away as well, because that will make the big difference in the end. If you just stowed away a little bit 10 years ago, all of a sudden it's a lot. And then you've got a business that's ticking away. Combine those two things together, you do quite well.
I really want to tear this apart because I love your idea around you have like this conglomerate of unicorn businesses that are like shiny and sexy and cool and flashy and you can get rich quick. And then you have this more traditional, maybe it's not as sleek and sexy, but they're more stable. They're more, I guess, guaranteed to have a portion of the market that are willing to pay for it. You have a manifesto that you've coined, the anti-unicorn notion as a bit of a philosophy. And what exactly is a unicorn, and why do people fall so hard for the idea of building a unicorn business?
So, for example, like AI at the moment, there's a lot of people out there that wants to, create the next whatever business in AI, and we're all involved in it to a degree. Even just getting a basic engineer could cost you 200,000. Like you can hire a GM for that money in many other industries. So, because it's a wave, things cost more, and it's a bit of an unknown. So, if you're kind of getting in early and you don't make it, then you can burn a lot of money very quickly. But where I've made just most of my money is just creating simple service industry jobs, like, even like a financing business. It's so basic and boring, but, we're netting, good 7-figure net profits from just doing what everyone else does. We just got decent marketing, good reputation, some good operators. Do that, and then you can do the same in the insurance industry. Same goes. You can do that with legal. Same go. Accounting. You can just go up the value chain, and it's not hard. You just need to know how to do a bit of marketing on a good business. And like I was talking to an accountant this morning, and he was just acquiring a bunch of other accountancy businesses because there's a lot of baby boomers retiring, and he's basically buying the business for 1 year of revenue, so 1 times multiple of revenue.
That's crazy.
So basically, you get their entire client book, which could double the size of your business, and you just pay, like, let's say they make $5 million. You go to the bank, you get a $5 million loan off your existing business, and then use that, and then your revenue is going to be hopefully 5 million more next year. So it's paid the loan off, and then you've got like basically clients for the next 10 years, double the clients, and that just doubles the size, and it can increase the multiple of the business because, as you know, there's tiers. So if you can get your business over 10 mil revenue, all of a sudden you got a multiple of, instead of at 1 times, it might be 3 or 4. Go to that next level, 4 to 5, and it's money for jam, really.
And what you're saying here is the way I understand it is, like, let's say I'm an investor, and let's say I have my own successful, accounting company, and let's say I'm north of 10 mil rev. I'm doing really well. I've got a valuation on the business that I'm worth 3x.
Yep.
And if I'm buying your business for 1x because you just want to get out and you just want to get rid of it, then I essentially immediately double the value. Let's say it's $1 million business. Now it's worth 2 or 3 because I'm a 3x multiplier.
Yeah.
That's what you're saying. So, like, kind of this notion of the rich get richer because they're multiplying valuation of what they're absorbing into their entity.
Yeah, and it's one of the oldest games in the book. Like, this is what they all do in Silicon Valley, and raising capital and buying out businesses to play that game. And it happens in gyms, it happens with accountancies, real estate agencies as well. Like, if you can kind of get to a certain level, your multiple goes up, and you can use that to either list on the stock exchange down the there's companies that are accountants on the stock exchange, and they're sitting at 11, 12 multiples, and like, they're doing the same job. They've just got more clients and they've got better processes. So if you know how to kind of set the business up, and AI is going to be a part of this, good management, good marketing, then you can really make big wealth quickly.
Now, for someone listening to this who's thinking to themselves, I don't have an accounting degree, I don't know insurance or understand it. Let's say someone that has no credibility or certifications or what have you. What would be your advice if they're looking at going, hey, I want to start a business one day? Like, where should I go? What should I think about? What should I start?
You can look at any sort of corner store. Like, I think about a pool shop. All right, so I don't know anything about pools. Like, maybe I'd need to partner up with someone. Like, you got to kind of get some capital somewhere.
Well, let's use the pool shop as an example. Yeah. How would you look at it from your own lens so that others could consider it for themselves?
So firstly, you got to like the business. So like pools, you might go, all right, look, if there's a recession that could hurt, where am I in the market cycle? Am I happy with this kind of asset class? We're kind of where we're at the moment. Things are growing in many areas. Discretionary spend's okay. It's better than it was 3 years ago. So people are still spending money on pools. Construction costs are coming down. So how are they making money? Well, they're probably making money through building pools, servicing pools. So would I want to go buy a pool shop in a lower socio-demographic area? Probably not, because they're the guys that'll do it themselves. So you don't have that servicing cost. I don't know anything about pool shops, by the way.
Yeah.
I'm just thinking. But, if you're in an upmarket area like Mossman or, a good part of Melbourne, of course they're going to just, get the pool boy to do the work, and that's recurring income. So I like recurring income. And then you think, all right, who's owning it? Are they a 70-year-old baby boomer who's about to kind of sell out and they've got no succession plan in place? Like, you need some luck. They're not just going to hand you these businesses. And then like you just need to market better, develop better systems. You might not need everything they currently got there. You could get the work done. And once you sort of perfect the model, which will take time and effort. So this is hard work. This is not like you just sit there and buy it and it's going to go okay. You got to like rebuild the business potentially. And then once you do that, you'll know it. You're going to be on the hunt like nonstop for the next business. And once you get 3 or 4 or 5 of those all of a sudden, and they're all got the same brand and they've become a known entity, your multiple's gone up.
Right, because you've built a system
Yeah.
that is like self-sufficient
So
or automated.
exactly. So people do this a lot in childcares at the moment. So childcares it's a really weird industry where you've got some global giants and then some mum and dad businesses. And they've got no brands, like they're just random, but the private equity mobs are trying to buy them out because they know they can get a multiple of 3 and then be worth 12 to them or 10. I don't know the exact multiples for childcares, but I know a guy that's kind of the middleman of this. So he's kind of buying out upmarket childcares in good areas of Sydney and Central Coast. And he's playing that same game to hopefully sell to the bigger giants down the track. And he could quadruple his money, but his wife's in childcare, so he knows how to service them better, so create really good reviews and just perfect business. He's a good businessman, marketer, so combine those 2 skill sets. That's how that scenario works.
Do you have to love what a business is and what it does to make money with it?
It helps. Yeah, it helps. Like, it depends. Like, a lot of people just love money and that'll keep them going. But that's a short-term thing. You know, you don't want to be playing in a space you don't enjoy forever.
Do you think people get an extra perspective, or like kind of like if you play in Mario Kart and you get the star and you go extra fast and you can run through walls, like do you think you get a little bit of extra energy if you're in an industry that you find fascinating, that you have some passion for?
Oh, 100%, because you'll go deep, like if you're not into AI, you're not going to be studying the latest trends, on a Sunday night. Like You're just going to be focused on other things. And that's what would like to get to that next level, I think. Right. So like I was always interested in property investing because I saw it as a free ticket out of the middle class. That's what it was for me. I was like, I can stay in a job, I can make good salary, but I'm never going to get rich. I'll have enough to buy a house in the suburbs, maybe get an investment property or 2, and then go on 1 holiday a year. And that's great but I felt like I wanted a bit more. And once I found this niche in, what I was doing with the value adds and also the commercial property, felt like a cheat code. So I just went deep after that point.
Can you explain like the psychology behind this? Because a lot of people are trying to figure out how they get out of the middle class and how they can start compounding wealth. And I guess the way I've seen it is when you look at property and you think about what it can do for someone is you can work essentially a job, take a portion of that income, put that into a property. In your case, you bought a house with a granny flat, bought it for $480, then you had 2 incomes. And then what? Like, how do you then leverage that for that next stage of wealth building?
So you just got to take more and more risk, really. So the risk I took was I just leveraged as much as I could. I had the stable job, and that's probably the only reason I had the confidence to kind of go all in. And, I got to the point where like as soon as I had enough deposit, I'd buy it with no buffers. And I'd be like,
what do you mean exactly?
So let's say you needed $100,000 for the deposit for the next property. I'd have $100,000 in my bank account, and it'd be that to the wire. And I'd have the deal lined up. I'd delay settlement. There's sometimes I even had to delay, this is later when I had a business. I was delaying tax payments just to scrape through because I knew the deal had a lot of upside. So it was like guaranteed money if it settled, but there was timing issues every time.
Okay. So you're like squirreling money away.
Yeah.
You're not quite at your target and you're already working on the deal. So the second your bank account hits $100,000, you're buying
We're
it.
gone, yeah.
And you're delaying payments and massaging things around to make it work.
And I missed it a few times. Like there was a deposit I lost once. I've got a $30,000 personal debt that kind of, it was a horrible 20% interest on it, but like it got us through the deal. And that deal was like, I remember it. I bought it for $710. It was a strata title play. So effectively it was 5 units on one title. I went there the day it was listed and I took a town planner. a surveyor and a builder out with me. And there's all these guys walking behind me, and we're like, can we strata tile it? Do we need firewall separation? What's the car parking rules here? How much do we have to spend on water meters? Like, I knew all in the head. And then if you strata titled it, those 5 properties individually were worth 1.2. So I had to spend about 100 grand on it. 100, 710, I was in the hole for 810 plus stamp duty. Call it, like there's several hundred grand profit just by settling on the deal.
Yeah. And where did that method come from? Like, were you reading books? Did you have a mentor? Like, how did you acquire all this knowledge?
It was just common sense. Go, how much does it cost to buy that unit or this unit when there's 5 on one title? Like, why is the price so different? Like, it's like buying a cake and selling the slices at a higher per capita rate. Like, it doesn't make any sense in property if you can convert it to that. So all it is a change of ownership and a little bit of, very loose renovations and construction. And then that's the other part of the strategy. If you renovate it and then boost the rents up at the same time, you then can get it to a better final product as well. So there's a few stages. It wasn't just chop it up and sell it, but chop it up, fix it up, then revalue it. I didn't sell. I just kept, and it worked out quite well.
How did this really catch fire for you? Because I guess going from one investment to this investment and then 19 in the period of 2 years. Like, what was really going through your head at that time? Was this just fun for you? Did you have a strategy? Did you have a playbook? Like, what were you trying to create?
Oh, I was just living on spreadsheets basically. Like, I remember I Googled unit blocks, title, multi-tenant. These are keyword searches on realestate.com and that. And I looked at every single deal around the country under a certain price point. So I had them all lined up, and you just sort of go through the math on each deal. And again, I didn't have the money, so I was kind of just like planning. Hopefully, that one is still there in 6 months, and then other deals came up like duplexes, and it later went on to like once those deals kind of dried up, because this is like 2014, 15 period, and everyone started buying these things in their super because the yields were good. So the yield got me there in the first place, and then I just worked out there was an extra angle to it. But then we moved into commercial where the yield was triple as good on a net basis. So instead of being a 3-4% net, which is equivalent of 7-8% gross returns, the commercial were like 8 to 9% net. So all of a sudden I was like, that was a whole new world, that one.
So instead of, I guess, buying and renting or flipping residential, you found that commercial was, I guess, a better investment or more valuable? Because people tend to stay away from commercial, especially during COVID. It felt like everything commercial just kind of stopped. What was the appeal for you other than the higher profitability in commercial?
It was the income, because I was trying to replace my income at the time, and that was.
So you're still working at this point.
Yeah. And I was like, I had my own office and closed the door, and when no one was there, you just quickly get on the spreadsheets and work away, because I knew I was going to do this full time at some point. Like, again, Australians love property, so if there's any way to work with it profitably, it's kind of, a lot of people do make that choice, and I was one of them. And I just remember plugging in this deal in Perth. It was 700 odd grand, and the thing was renting out for 55,000 net. So by the time you took a mortgage out on that at the time, I was looking at can't remember the exact numbers, but it was something like $700 a week clear, 35,000 a year, and it's like, that's a massive pay rise just for buying this thing. What's the catch? And why is no one looking at it? And I remember I called up a few people in Perth at the time, and they're like, "Oh, don't invest in that commercial. It's terrible. Perth's down in the dumps." They were freaking out. They're like, "Oh, you're a young guy. Don't make this silly mistake." Everyone was saying, "Be careful." And my logic was, this thing was a little supermarket. It's been there for 20 odd years. And then it was 2 businesses. The other was a fish and chip store. And so I called up the fish and chip guy, and he had run it for 30 odd years, and said, "Who's taken over the business? Because I'm scared you're going to retire." So got that lined up. I know we're paying good rent. And I went, what do you mean good rent? Oh, cheap rent. I was like, oh, that's weird for a tenant to admit that, but I like it. So then, and I thought, all right, so Perth has been in the dumps. It's got through, this business has got through the GFC, got through the 90s, crash back then. There's been all sorts of ups and downs in Perth over the last, few decades. This business has survived. So again, thinking as a business person, even if that guy retires, there's a cash flow business there that someone will want. Maybe it's not passive, maybe it is. But either way, they're probably going to pay the rent. And the other one was a supermarket, and they were making huge money from selling cigarettes and vapes and all sorts of things like that. And then obviously just everything else the supermarket sells. It was a small one, like a mini mart, like 400 square meters. But yeah, just I thought if the recession hits tomorrow, like people are going to still buy eggs and buy milk and
Fish and chips.
yeah, they'll probably buy more of it if anything, because they're not
Yeah.
going to go out to restaurants. They're going to go buy their fast food and stock up their fridge. So I just like the idea it's kind of recession proof.
Yeah, it sounds like you're looking at like the really obvious, basic, fundamental things, and some would say maybe like more like of a boring concept potentially.
Yeah.
And you often say that you want to build boring and you want to build forever. What is a boring business, and why is it a better bet for making money?
It's everything they don't tell you about in seminars and all that kind of stuff. So there's all these things of like start the next unicorn, online marketing, whiz biz business. And there's just so much competition by really good operators. And the problem I've never really seen many of these seminars. I've never gone to one in person in terms of, but I've heard what they talk about. And I just think, well, that's for the 1%. They're talking about what will win for if you're the best of the best. Like, what if you just are, a pretty easygoing salary guy or girl who just wants to get by? Like, I think, all right, so the masses, how can the masses actually get ahead? And it's doing there's more opportunities. So there's more opportunities in the boring accounting business or the pool shop or, the things that everyday people need.
Yeah.
Rather than trying to create a new app or online product that may never work out.
I would agree with you. Like, I think I was reading some articles about how in Japan, like the younger generation don't want to take over the more traditional older type businesses.
Yeah.
And even Cody Sanchez, she's like running across the States right now, like buying laundromats and doing cool branding and cool marketing and flipping and making them rad. So like when you think about like the world of business, I think everyone's looking for like the big, crazy 100x unicorn. And you're saying, hey, you can actually look locally at like the fundamental businesses that have sat in the community for decades and have just like printed cash every year.
Yeah.
How do you even start to get into that world? Do you just got meeting these people? Like, where can I start to browse where I can even find one of these businesses?
Well, a lot of people will inherit them in the next few years. Like, I know lots of people that have inherited their father's mortgage broking business or accounting or wealth creation firm, whatever it is, but they're doing it on a local level. So if they can kind of, like the services you guys offer, like if you can get in and turn that business into, a citywide type thing and become a known entity brand, you're turning the multiple from 1 to 3 to 3 to 6.
Yeah.
So
you can sell it or you can just keep running it, right?
Yeah. So rather than focusing on the 100 multiple, like you said, focus on what's realistic, and it's kind of a percentage play.
Clients want it all. A slick-looking website that can run their business and scale with their success. Wix Studio is built for that. Plan out your client's whole site in seconds with AI-powered site mapping and wireframing. Then when everyone's on the same page, jump into the creative, starting off in Figma or in the Wix Studio editor with super precise layouting tools like Grid, Stack, and Flexbox. Go above and beyond the brief with no-code animations, custom CSS, and built-in business solutions. And make your whole vision responsive in a click. And there's zero need to break a sweat when clients grow fast. A dynamic CMS with global design settings and reusable assets lets you turn one page into hundreds. Design smoother and deliver sooner. Go to wixstudio.com. Now, when you think about the boring business, I like this idea around like trying to find almost like the hidden gems. It's almost like you're sifting through the local community to try to find these opportunities in the rough that people are overlooking because they're not sexy. What is it that a boring business will give you that you won't get if you're trying to chase, these seminar opportunities?
It's cash flow. So most of these other sexy businesses, like the 100x ones, require capital raising, years of proof of concept, building something that doesn't exist from scratch, and you're not making money during that period. So that's lost opportunity. It's like the whole negatively geared versus positively geared type asset. Like, I'd rather something that, if you can buy into it, you can see the P&Ls of it. Even if you're starting from scratch, you might have a line of, like, this is what I did with my buyer's agent business. I started testing it before I had, a website. I didn't have business cards. I didn't have any of that stuff. I was just doing basically cash jobs because I was helping mates or, and then their mates wanted work. So I saw the word of mouth kind of scenario work where people wanted help buying similar properties to what I did. And that's like, it was an accidental business. I didn't need a website, didn't need craziness. I just knew, all right, well, the cash flow's there. I wasn't thinking about multiples or, is this going to be the next big thing? I just thought, well, there's a service, there's a need for it. And that if people are paying you, then you're onto a winner.
How can people put themselves in a position to better, find and start these opportunities? Let's say in your case, you had, supply and demand. People wanted to talk to you because you were already servicing something. How can someone start to find an opportunity like this for themselves? Like, where should they go first?
Oh, most people just do a side hustle, do it, like keep your job because your salary is your biggest friend. Like, again, speaking as investor first, business owner second. Like, I'm an investor. That's how I got ahead. It's how I got the confidence to kind of invest, or that's how I got the confidence to go into, business. Otherwise, I would have never left the golden handcuffs of the job. I started, investing, and you want to be able to make sure you're kind of getting the cash flow that you can kind of put into that. And if you're going into a business that makes you no money, then that will just increase the risk massively as well. So do it on the side, have the salary there protecting you, and you can, take your time that way, do it properly.
Because I meet a lot of people, and you're right. Like you see events come up where there's like these seminars and these gurus come out to share ideas on how to build a business. But if you look under the hood, typically it's, hey, I have a business model. If you buy this product or join this community or become a part of this thing, I'll show you how to build wealth. And I think there's issues with that because they're leveraging and marketing what they think you might think is sexy to come into their seminars, to buy into their products, to buy into their community. Then you kind of end up stuck in this framework. You're saying that you need to look outside of that. You need to go identify like things in the real world that already exist, that are already cash flow positive, and you got to find a way in.
Exactly. I think if it's cash flow positive, it's working. It's so simple. Like, like I've got a mate, and these are bad examples, but like even a vending machine business, like I got a mate who did it very well out of that, but the issue was it was just too high touch. You go and you're dealing with people with restocking, and you used to put cans in front of like big construction sites, so you're driving around. It's very manual, but it was cash flow. It was highly positive. It was great business margins, but came with effort. So there's kind of a you want a balance between, doing it all yourself for that kind of thing. But at least you knew I'm not going to lose money on this, because if you can maintain or increase the profits, you can still sell the business again down the track, or just keep it and keep collecting money.
Is it less risky to start a new business on your own, or to acquire someone else's business who's existed before yours?
It's a good question. I've only started businesses because I found that, at least in my industries, it's cheaper to build from scratch than buy someone out.
Why?
Because then I don't have to pay a 3 to 5x multiple on future income. So it might take me more time to get to that level, but I'm not 5 years behind in profits. It's like, when someone buys a cafe, you don't need to buy the brand. You might want their equipment and all that sorts of stuff like that. You're not going to pay goodwill on that because you probably think you can do better as an operator, even though it's the same location and just different staff. But I always found I've started from scratch in my industries, but there's others where, you kind of want their systems.
Now you've built 8 businesses and they're all profitable companies, and you've not needed to get any venture capital. What do bootstrappers understand that fundraisers or people that seek capital don't?
I try to not overcomplicate things. I was just buying properties myself, and I realized there was a gap in people helping me. There's a lack of education out there. So, all right, how do you fill that gap? And then when we started buying a lot of commercial property, we needed commercial finance. No one was really offering great commercial finance solutions. So you just then start that business. And then the insurance, a lot of people were trying to get budget direct quotes, and then they're not going to insure a large industrial site or a shopping center. So you need a specialist insurance broker. So it's kind of just filling the gaps, because it would have helped me in the process. And that's, wasn't thinking multiples. So I was just knowing that there's a demand for this. It's not really out there. So it was just living through it, I guess. And I guess a venture capitalist is looking, all right, how do I turn the Rethink brand into a global thing? And they're just going to, I guess they might then go into markets where they're not thinking, all right, is this really solving a problem, or am I just trying to expand the brand for the sake of it?
You've never had a business fail.
To date, no.
Not one.
Every single time we put on a cost, there's got to be a business case to it. So you don't just put a 150 grand marketer on, because what if that marketer doesn't return on their costs? And you want to kind of cover themselves 3 times over, because by the time you account for, I guess, a business margin, like let's say you're making 300 grand and your 30% business margins on that, so 90 grand, like that's what you're really getting out of that. So they need to kind of increase. They don't just cover their wage, they've got to triple their wage. That's how I look at things. So,
Okay. And you built one business and then you realized, okay, we're solving this problem.
Yeah.
Then you realize that there's no other lateral business that can support that. And then the parties that you were trying to partner with weren't really great. Then you would just put another business and then another one. Was there any point where you were like, this is getting crazy, I should just build one massive business? Like, why have these different cohorts working together?
We actually created Rethink Group last year because we found that they were all growing at different speeds. Like one was doubling in size, and that created a lead funnel problem, because if we grew too quick and then they're not growing at the same rate, then the service started breaking down. Complaints would start there because wait times were too long. So we really needed to grow at the same speed. So creating Rethink Group was a way of like kind of centrally managing everything, making sure we're all talking together. We're all on the same team. It's a different brand. They're like, the lawyers are going to be lawyers. So they've got nothing to do with the insurance business, but they're all tied together really, because if that's not working, they're not working. And, if we're not finding the right deals, then it creates a pretty big problem quickly.
Well, your collection of businesses operate kind of like the Richard Branson concept, where it's like a Virgin style ecosystem. And it's what we'd seem as a branded house where everything is branded together, rather than a house of brands where everything is branded separately. Why did you feel like this strategy was the best for you?
So after maybe like 5 years in business, we found that people started trusting the brand more. So again, the difference between year one, where I was door knocking, like I was trying to get leads from mortgage brokers. I'd go to their place physically and say, here's the pamphlet, deals of the week. Here's the cash flow breakdown. Let me know if you've got any clients that want those deals. The problem came as soon as someone said, yeah, I like that deal. Like, and I had great deals there. They were literally unit blocks that I couldn't afford and stuff like that. And as soon as I mentioned there's a fee involved, they're like, who are you? You're just some individual, like, insinuated I'm dodgy, and they can just go direct to the agent, even though I got it off market or whatever. Their whole game was to cut me out. And then it got easier when word of mouth started, because they're trusted because their mate used my services. And then that went through the line of we've helped people build, I've had clients buy 15 properties or more with us. So as soon as I send them a deal, they're like guaranteed yes, because they know, they trust what like I'm putting in front of them. And so the trust started building, and that's where we thought, all right, well, look, the brand has some clout now, especially in a high growth new industry where there's all these one-man bands out there, and we're like the, I guess the old school OGs in the industry, especially for commercial. That just started kind of multiplying, and you wanted that same brand over other industries, because when we were referring out to some random insurance business, no one knew who they were. So there's no trust. So that we found the cut through in leads, like 75% of people would say no to that and just use their other guy. Now it's probably 95% guaranteed they'll use the Rethink brand, even leaving their own brokers in many cases, just because they trust the brand, and especially if it's in commercial. So yeah, it just got easier with the brand. So we just wanted the brand to kind of be more visible.
What about this do you think created trust? Like, why did the brand work? Why was it building trust? What was it that was actually happening in the mind of your customers?
Like our biggest strength were our results. Like, because we grew quick, and that created problems over the years where sometimes wait times were too long, or you got new employees that are still learning the ropes. So sometimes like there were little kinks in the armor here or there that we were always working through, and we still are to this day. But the results were always good with clients. So word of mouth, like, if you bought them a $3 million deal and it's worth $4 million in 2 years and they got $1 million equity, like it's just guaranteed repeat business. Doesn't matter if someone took an extra day to get back via an email, but like the bigger I've got, the more I realize that customer service is just paramount. So we've created we've got this thing called Project Elevate within the business, where it's like literally just going through every single step. Like there's these Gantt charts that go on for days, and it just shows every little touch point in the business, and we're just trying to like make it bulletproof. Because if we can do that, then that can go to the next level of scale. Because the more humans you got involved in the process, there's more room for error, and that's a problem for a big business. Like there's like over 120 of us now. It's a lot harder to train, the last 30 people that have joined compared to when it was just 2 or 3 of us.
Yeah.
So process is everything.
Now, you said earlier that there was a certain point where it was like really hard to make money, and then all of a sudden it became a lot easier to make money. What were the different stages that your business went through? And then how has it become so that you're able to make so much more profit now that you're so far in?
The first stage, you're just starting out. Like it's you doing all the sales and probably all the ops as well. So it's all about leads. That's the hard bit. And you got to spend as a percentage of your revenue, what you'd have to spend to keep up on Instagram or, wherever you're doing your external marketing is going to be huge. So every dollar you spend is going to be a kick in the teeth. And you really think, all right, do I do it? Oh, the market's quietening down. Let's hold back on that. And then all of a sudden you're not marketing to your full potential. So that's a problem. But you eventually get past that if you've got a good product and you work your ass off. And the next stage is my first employee. And you think, oh, how much are they going to cost? All right, it's 120 grand. But then I've got to pay super and all these other costs. And like, are they really going to cover their costs? And the answer is probably not. So you've got to then take it as a cost. And hopefully you're covering enough of their income. But that can't last for long. And that kind of happens for maybe 3 or 4 or 5 employees where you're kind of just almost going sideways in profit. You might be doing all the big jobs personally, like dealing with all the big clients. And then that's the next stage. When can you remove yourself off the tools? And that's really hard because you lose all the, you number one, you can't probably do that in many cases. You still have to look after clients and you might have 10 staff now relying on you and you are the profit margin. You take that out, your profit drops 30%. You're doing it for the love of it. Like you mentioned, you're at 40, like your last, you will go to 60 so easy now because you've probably pulled yourself out of like the nuts and bolts. You're still doing it to a degree, but you've got control over your day. You then you're in business, you've got the experience, you go, all right, I'm going to do that. That's going to have a big impact on potential revenue upside and you're chasing bigger and bigger things. People trust a business with 40 people or more, a lot more. So bigger clients, higher margins can get created out of that. And all of a sudden you can start filling gaps. And then relative to what that initial 120 grand salary is, it sounds cheap all of a sudden.
Yeah.
Like anything, your profit margin's larger. What's another 120 now? Nothing. And that's where it gets easier.
Do you think most people quit in that stage?
Most people don't have the product or the nous to get out of that stage. Like they just become the gopher. They're just technicians or they're on the tools basically and they're doing it themselves. So, and they might be happy doing that forever because they're not a real business owner. They're just good at the job and they've just expanded around and leveraged their skill set a bit. But yeah, most businesses stop there.
Okay. What if someone wants to stop being a gopher and they want to start to build profit? They want to start to expand. How does a founder need to evolve and change their business so they're not stuck in the business, that they can start working on the business?
You got to have really good staff. They've got to have the ability to collect what you're not doing. So, and there's still going to be a bleed rate. If you lose 30% of your profits, and they're doing it, they might get 20 of that. There's still going to be a bleed rate there. So you then need to be able to use your time to get more marketing, more leads coming through, but the systems need to be in place by then. At that stage, a lot of employers can often leave because they go, oh, look, I'm doing all this. Maybe I'll just do it myself. So you're going to run into that issue, which happens with any business. So you've got to kind of be hiring relentlessly sometimes, and then you're paying recruiters their fee. Like it starts to get very costly. But if you can get out of that swampy area and you've got really good at marketing, or you built your personal brand or you've got a podcast or something that's got some edge over the market, which means you can deliver consistent leads to that business. And it might be word of mouth. It might be just a great product. So it's got to be, how can I get more leads than others? And if you as a founder can do that, I like that a lot more than staying in that gopher zone.
Do you think that founders that have little to no sales acumen are going to struggle to get out of the gopher phase?
Ongoing every year, 2-3 months in Europe. So every time I did that is where I get this 30% drop from. That's how much my revenue would drop the months I was overseas because I wasn't selling. And then I realized I've got to fix it. Then we just started investing more in good salespeople, commission only jobs where they can, it's like their business that way. So they get more of a piece of a pie, but then it effectively meant they were selling like it was theirs.
Yeah, I see so many business owners get caught in this trap where they are the sales mechanism in their entity, they can't go away. When they do, they get the drop, then they come back and they get frustrated, then they get overwhelmed, then they're back in the hole again. What are some of the things people can do to get out of that trap? You're saying hire a sales team that are better than you?
Yeah, so like the thing I did was the commission only roles. Like that was a way of like, because the revenue, I guess the leads were there. So you got to have that ability to generate leads. When we were strapped for cash, the commission only role was a lot easier than paying someone 200 grand up front, because it's going to take them 3 to 6 months to get going. So that's like lost revenue. And it doesn't work for every industry, but like for ours, you could do commission only roles. But then I guess the negative side from a business owner point of view is they can earn a lot more money doing that as well.
Like, did you find that you went through different evolutions or different versions of yourself as you went from like 10 to 20 to 30 to 50 people? Like, what were those evolution points for you as a founder?
Probably the biggest one was like in the early days, like you'd want to almost be too close to the staff. And there's been a few times where like some of them gone sour, whether they wanted more money or they thought they could, whatever, it doesn't matter. And then I'd try kind of keep them happy.
Well, I think this is really important. I think a lot of people deal with this where let's say they have a team of 10 and everyone's friends.
Yeah.
And they run the business for a year or two. And then as the team goes from 10 to 20, 20 to 30, there is a bit of like animosity, because it's like we used to hang out, we used to chat. Now I'm like, I'm over here and we don't talk anymore. And there's like this point by which the culture shifts or the relationships merge and morph and they change. Like, what exactly have you experienced at these stages of growth where teams can go sour?
Yeah, it's exactly what you just said. Like sometimes their growth rate hasn't been as quick as the company. Like there's that old saying, misery loves company. And so if there's another employee that's kind of had a bad day and then all of a sudden they're chatting and things can kind of get worse that way. But I used to be like, all right, let's then take this person out, try fix them. And like there's a structural issue there that they're not happy with. You just let them go. Like, because no matter how valuable they are, it's not worth it. There's like I love hiring people because it's like a new personality. They're vibrant. They've got skill sets, new ideas. You don't need to keep the old dogs happy. Let them go, because the new ones are going to probably be a lot more productive, and it grows to the next stage there rather than trying to keep you in the old days.
I think in the world of marketing, the word disruption just gets thrown around haphazardly all the time. And it's constantly in marketing. How do you define real disruption? Like, what is that? What is it really in essence?
You're either going to be the first or the best, generally. Like, go for one of those. Like, if you
First or the best.
First or the best. And if you don't think you can be the best in an industry, it doesn't have to be the biggest. It might be on the best for that subsector of clients. Like, we're into rural commercial investing. We can help rural clients invest because we know they're not represented well. We're the best at that. So there's so many like niches to this, but everyone's thinking be the first. How do I create the next AI company that's going to challenge all that? And that's just fairy tale stuff. Just be the best at whatever your niche is. If you're an accountant, be the best at representing plumbers or tradies in your local area, and you'll clean up because you'll get the word of mouth.
Can I challenge you on this?
Mm-hmm.
When people say the best, we hear this all the time. So we've done thousands of workshops. Everyone thinks that their product, their brand, their offering, everyone just has this delusion that they're already the best. The market just doesn't realize it yet.
Yep.
How do you define whether you actually are the best or not?
I honestly think 99% of those people know they're probably not the best. It's kind of like something to say in marketing. But they know they're up there, or they're trying to use that as a marketing ploy. Like, you can't even like market that because that keyword is just used on 400 different sites. So like everyone is. It's a redundant claim almost. So
what are some signals that someone is the best from your perspective?
I think size, like if they've been in 10 years in business and they're like doing, I don't know, let's say 2 billion in loans a year, and there might be one other competitor up there, like it has to be them, because the proof's in the pudding. Like in terms of like net wealth and net revenue and all that kind of stuff, like that's the scoreboard. They wouldn't get those numbers if they were shit at their job. They get them because the word of mouth is there. They've got the critical mass of people that have heard them, and like you're dealing with not just someone's mates, you're dealing with like your 7th generation of lead referral, and that's kind of where it starts to get to a point. Well, maybe they are the best because they're the biggest in the industry, and they're not, then they stay small. So a small operator saying they're the best, that's wishful thinking.
Now, if someone is listening to this and they're like, I'm swinging for the fences, I'm making a unicorn, damn it, I'm going to be a billionaire. What is that disruption? Is that really at the end of the day, the most disruptive thing to do is to give the end consumer the most valuable product possible?
Yeah, like if you can cut something out of an industry or provide like this extra level of service that they've never seen before, or something half the price, like then I think, you've got the ability. You just got to have that. You've got to be a bloody good salesperson, because it's all of those things require capital raising, because you're going to have years of no income before you get to that big, integrated network that solves a big problem for a SaaS. There's these companies that just need to be built, and it can take decades.
I had this fun experience last night where I was getting a taxi back from an event. I did a keynote. Couldn't be bothered getting an Uber because there was a taxi right at the front of the venue, and I jumped in. And I'm on the phone, and I pull up at the front of my house, and I wave to the guy in the front seat, open the door, and I walk off. He's yelling at me. He's like, "Hey, you haven't paid." And I was like, "Oh, dude, like it was a taxi, so I didn't pay him." In my unconscious mind, I just have become so used to using Uber. I was like annoyed. I'm like, I got to get my card out. I got to pay this guy. Like it's like those little tiny things that I think so many business owners forget, is like those little details matter.
Yeah.
Like not having to think about doing something. If you can remove a point of friction, or if you can remove a pain point, that is innovation. That is disruption.
100%.
Yeah.
And like, especially with everything that's happening on like the AI level, like most industries are going to face disruption. Otherwise, they're going to fall behind. So just being ahead of the game, and that could involve doing something very creative in a very simple industry that's been around forever. Like not reinventing a new wheel or, new product. You're just fixing an old one for the better.
And it's not always a product, right? It could be the way it's marketed.
Yeah.
It could be how you talk about it. Like we're seeing laundromats become cool again because they're just marketed with cool merch and cool signage and all the rest of it. Yo, my name's Dane Walker, and I am disgustingly obsessed with branding. I had to figure out a way to do branding every single day, so I branded myself. Then I started my agency, Rival. And hired a team of branding mavericks hell-bent on creating brands so good that they'll make your competition shit their pants. So here's the thing, you want your brand to go viral, and Rival makes brands go viral. That's why we're offering you a free 30-minute branding session to get an expert's opinion. If you don't believe me, the proof is in the pudding. Here's what clients have to say about Rival.
Rival is trusted by brands like Nutrition Warehouse, Light My Bricks, and Vumi.
So if you want to absolutely smoke the competition and make your brand go viral, hit the link below and book in your free 30-minute branding session. What's the next major Australian industry or wave that you're seeing that people aren't quite seeing, that you think that there would be a significant amount of profit in?
Like what I'm getting into is probably the renewable side of things. So, so basically what we've, as you mentioned, we bought $6 billion in property. And a lot of that is large industrial sheds, shopping centers. So they've got these big roofs in the middle of suburban areas. Everyone knows solar panels, but what everyone thinks is that they think of it from a residential point of view. So what we've done is gone, all right, well, they're paying huge power bills. Like some of these bills can be $1 million a year in electricity if they've got a giant cold storage facility or a manufacturing.
Oh, wow.
So there's a lot of direct, benefit to the tenant. So you put the solar panel on, instead of, shooting the power from a coal station like 200 kilometers away with all that, friction on the wires, like you're going straight to the tenant and you can deliver it at a much cheaper rate. So what we've come up is just basically, all right, well, power bills are going through the roof. So the market's in our favor. Every time that goes up, more margin getting created. So, we've got access to these roofs. You just put a big solar panel on, maybe some battery storage to kind of cover the downtime overnight, and then charge direct to the tenant, become a power supplier. So it's like a way of decentralizing.
God, that's genius, man.
It's like decentralizing the power system.
When did you have this epiphany? Because you're right. You're buying all this commercial property.
Yeah.
And at some point you realize you got 10 kilometers of roof. And you're like, dude, we could.
And it's middle of cities.
Yeah.
Like where they're using the power. So initially it came from the idea, how do we reduce the outgoings? Because remember, it all goes back to cash flow. Like, all right, we want to boost the yield for investors. One way of doing it is to put a big storage facility on top, generate the power. The business model is we deliver the power like roughly 20% below mains rates for the tenant, so they're happy. We sign a lease with the landlord, pay them a rent on the roof. We then, like as in Rethink Renewables, owns the infrastructure on the top. So it could be $1 million down or 200,000 down, whatever the size of the job. We're taking the risk, but in return for that risk, by the time you collect from the tenant and then you pay the landlord a roof lease, there's a margin in it. So that's the business model. And then everyone goes, well, what if the landlord just does it themselves? Well, one, you're going to have to cough up with a lot of cash. And then, yeah, you won't have to pay us a roof lease, but you legally have to, you can't legally charge to a tenant. So you have to have, otherwise the Australian Electrical Commission is going to be on to you because you've got to basically have a license to do this stuff. So, and we can manage those licenses too if the landlord wants to take that risk. But basically, it's just a way of taking market share away from the big guys, the AGLs of the world, turning it green. So it's obviously much better for the environment. Just the whole energy world is there's so much opportunity. There's so many grants going on. There's so much need for it. There's huge opportunity. Ours is just one niche, but I'm sure there's plenty of others at the moment.
Now, this sounds like a bit of a outlier in your collection of businesses because you've got kind of more of a traditional system that is like integrating together into one brand. This feels like a bit more of a unicorn type play.
Yeah, it's the highest risk because it's like capital up front. So all my other businesses, you're kind of collecting money as you go. And this, you got to spend $1 million and then you got to return on that. So it's almost like a debt business.
It's almost like inverted.
Exactly.
Yeah. Okay.
But the benefit of it is the multiple's a lot higher. So instead of being a 3 to 5, it might be a 15.
Whoa.
Because it's recurring.
But it's just more expensive and takes longer.
Yeah, you've got to spend a lot. Think about a roof. You've got to come up with $1 million. We haven't got a real good banking solution either. So it's literally cash. So you just go, all right, I'm making money through this business. I'm going to then put it on that because I'm going to get a very good return on the roof there. It's all scheduled in, like the tenant signs a PPA, power purchasing agreement. And then we sign a lease. Like we create a lease for the landlord. And this is the best bit as well. Like the landlord, because we've increased the income of the property, they get an equity uplift. So they get extra cash flow and free equity for no money down. So let's say you increase the value of the rental income by $7,000 a year.
And then that's more valuable.
Yeah, and then that $7,000, there's a cap rate in that local market of 7%. So what if it's $70,000 a year? Fine, it's all on paper, but then they can refinance it or sell it. Because whenever that next buyer looks at buying that deal, they're going to see, all right, the industrial tenant's paying $380,000 rent here. There's it could be a cafe complex paying 60, but there's a roof lease paying $12,000 a year on top. So it's all included in the numbers. So people will pay more because the yield's higher. So kind of win-win-win. The tenant gets cheaper power, we get a business margin, and the owner makes cash flow and equity. So
that's remarkable. And then you're collecting the power and then selling it as well.
Yeah. And our long-term goal with that is like once we've got, hopefully a couple of thousand of these under management, then maybe one of the, big companies wants it.
Either you make a ton of dough or you make a ton of dough by selling it.
Yeah, but it's going to cost us because it's debt up front or cash. So, but yeah, like even if you just sit on the cash flow, it's kind of an easy machine.
This seems like a bit more of a big swing for you. Were you able to make this type of bet because you felt like you'd created some sense of a security blanket with your other businesses?
Well, no one else could do this unless they had our, database. Right. So like you can go to rental managers for industrial property and say, oh, can we get access to your books? But like, unless you give them massive kickbacks, you're not really going to get far there. But we've got the trust of the clients. We know them and go, hey guys, do you want to discuss this? And we can do feasibility studies for them. And so we've got the access to what we need to. And because we do the due diligence on these properties, we know the power bills already. So you can kind of break them into sections and go, yeah, that's column A, that's the high target jobs, and then they're the ones we want.
Jesus Christ, man. So you've found a way to like commercialize this market, collect all the data, and then use that to build renewable energy. Do you see this as like something that's going to be quite significant in the Australian market?
Look, if we can get cheap debt for it, yes, because it's like that's our restricting factor. Because like we've got a pipeline of 100 million in terms of jobs right now. We can't afford that, 100 mil cash. You just can't keep doing it. So right now the market's not ready for You can get loans like asset finance loans and stuff like that, but the interest rates are well above 10%.
Okay.
It's not worth the risks until, like we want a bank loan style. Like if you can get a 6-7% type interest rate on the loan, business margins look great after that. That's when you can scale.
A question I have around what you're building here, though, is the Australian distribution energy market is projected to grow over 43 billion by 2033. How much of that market do you believe you could capture with a business model like this if you had the debt to back it?
Yeah, I think anyone with a commercial property that doesn't have solar on it, you should be considering it. So there's about $1 trillion in commercial property in Australia compared to like 11 in residential. It's still a small market, but the good thing is it's a lot more larger scale per capita. So you think the towers in the city, the giant warehouse distribution centers, like residential is a lot more like there's units and there's 400 square meter blocks of dirt. So deal size is a lot larger, and that's very convenient for, I guess, the renewable energy market because it's so different. You wouldn't like to put solar panels on a house and selling it back to the grid. Doesn't work. A lot of the times you can't even sell anymore back to the grid, and the houses don't use enough power to really generate things compared to what commercial would be. So
what do you intend to do with the business next?
So because of the amount of capital invested, this is probably my only business that I see the need to probably sell onwards because, I'm investing millions of my own dollars in cash into this. So if I can get that back at a multiple of, 15 times or whatever, even if it's 10, it doesn't matter. Like you want to probably think, how can this business be as automated as possible? So then maybe a big power company wants their market share back and it kind of gives them the green tick as well. So we're thinking about that as well. But it's just the capital up. Right. Invested is probably
why is it a 50x? Like, what gives it such a significant multiplier?
So we sign leases of 10 years, but with 2 10-year options. So you got control of the roof for 30 years. So that's real estate. And I think in time that real estate will be worth more. So maybe there's another upside there.
Like there's an increase of demand and power usage on AI infrastructure. Like people are talking about building, underwater like energy farms so we can have enough power to run all this AI tech.
Yeah.
Is a part of this running through your mind as well?
Oh, for sure. It'll make it easier. And we all know we've got to move away from the traditional uses or creators of power. So there's going to be this period ahead where we're in this middle of this transition. I think we're going to be a part of that, whether it's large or small scale, like we're part of that transition. And that's, I guess, being part of that is the opportunity itself.
Okay. Now, if you're a founder and you're running more of a unicorn-based business or more of a traditional-based business, have you noticed that there's a behavioral difference in how people run and operate a business based on whether it is a unicorn or if it is more traditional?
It's such a good question because I've only realized this when we've done the renewables. I guess the mindset is you want to create the product completely up front where it's like ready to go, user ready. Like I've always had this mentality, like I want to make money straight away to take the risk. Like my first business, I didn't make money because I expanded too quick. So after that, I was like, all right, think about the monthly P&L, make sure it works because that doesn't work in the unicorn business. Your monthly P&L is going to look horrible for a long time. And then you got to owe investors money and then the pressure starts building because you got to return on that. You got to dilute your shares to keep it going. It's so different and it feels less lucrative, to be honest. But if you win, it's like winning lotto. That's what everyone's focused on.
How do you identify these moments in the market? Because it sounds like you're someone who's kind of looking around the corner and going, oh, this is kind of coming next. We got to take advantage of this now.
Well, it's what I would use myself straight away. Like even the renewables energy business, because I've got 65 commercial tenants, and there's all these tenants paying huge amounts of power bills, and I was looking to reduce the outgoings. And I thought, oh, well, look, if I just invest myself on the roof, it's going to cost me a lot, but then I can't legally charge them. So that's a problem. So then how do we get around that? And then, you've got to have a provider do this. You've got to have, like the guy that I run this with, Paul Harmsworth, is a genius in that space where he's sort of setting up all the power purchasing agreements and then he's got the licensing and, it's a decade-long process to get credibility in this industry. So I'm not going to compete with that. So he's now on the team and then basically we work together and it helped my properties. I got better returns out of it. And then because the business took the lease roof, then it can be recognized as a third-party income on the leases, and that's where the equity component comes out of it.
Yeah.
If you just invest on your own property's roof, you don't get an equity benefit. You're just saving on cash flow. But if a third-party business signs a lease, it's no different from having another tenant there. And that's where the bank's valuers recognize the extra income. So I thought, oh, that sounds good because then I can get free equity. And then even though it's like running through a company instead. So
Like, I know you feel like this is like a normal thing, but this is pretty nuts. Like, how I want to understand how you think about this type of, what is happening in your mind for you to catch these patterns or these systems that you go, I can build a business with this.
it's probably just the investor first mentality. Like I feel like I'm a born investor. Like you can I'm more that than a business person. Like, so to get an above average return, like I've always gone with like, you go against the crowd, invest. Like, I can't wait for a big recession. Like the only reason
You can't wait for a big recession.
because it's where you can buy at a discount. Like, and I've trained my mind to think, right,
It's like your Black Friday. Like, when's it
yeah.
happening? Because I'm ready.
Like the stock market will drop 30, 40% that week. That's the point where it feels like it'll drop another 30 or 40%. And you won't want to invest. Like the fear of losing everything will be there, but you've got to train your mind. That's when you get in, right? When it's the worst psychology point of view is you got to go, that's the moment I get in. Because if you look historically, which I've done, that's when you get the good gains out of it.
Bets.
Like when COVID hit and everyone thought every fifth person on earth was going to die, that's the moment. It sounds a bit rough, but from an investment point of view,
that's crazy though. Like
just
how
gonna beat
do you
them.
know? Like how do you have the nous to do it at that point?
it's almost the psychology will help you. Like you knowing or feeling this is terrible at that time, you've got to see some signs that there's a discount. Like you don't do it if the market hasn't reacted, right? When the market's reacted, because most people are going to kind of play it a bit safer and go, oh, like you got to be financially ready and capable at that time. And remember, like at the time there's a recession, banks reduce liquidity. So you're going to find it hard to get bank loans. You're not going to get that 80% loan that you would have that day. It's probably going to be reduced to 50 or no debt. So that's where the cash investors, like say in the GFC, when that happened, a lot of fund managers started 2010. That's 2 years after when because they were cashed up and they bought the towers at 40% discount. And then the property market recovered 2 or 3 years after. They made a shitload of equity and they recycled it. Their investors loved them. So then they built personal brands or company got credit out of it. Like right now, we don't have that opportunity. We're just kind of fighting the rising tide, which is still good. But yeah, that's if there is a bad time, then just keep enough for that. And yeah, if it sounds horrible, that's probably a good time to get in.
Okay. Now, when someone says to you, dude, why aren't you happy? You've got this massive portfolio. Your businesses are killing it. Why do you need more?
It's an easy one because anyone that's ever reached a goal in life realizes like it was the journey that was the fun. The money goal was really underwhelming, to be honest. And it's the journey, getting there. Like the one thing I always kind of pity is imagine you're a trust fund kid and you're given 100 million.
Right.
Like how do you improve your life from there? Like, turn it to $1 billion maybe, or if you just sit on it and spend it and deplete it every year, like that would not feel fulfilling. Business is fun if you let it be. So I've sort of made sure I don't completely snow myself under with work. And that's what I used to. Like I used to love doing the 10 o'clock nights and starting at 5, 6 a.m. But that's what you pull back on. So you can kind of then be a little bit more efficient.
Yeah. Do you look at business as a game?
Yeah, for sure. In terms of the game, like I'd love seeing a competitor do well so I can try beat them at it. So it's kind of like the competitive streak goes, like, because business can be war in a friendly way, but like everyone's like trying to steal what you've done. There's a lot of that. And that's, if you got that mentality, you can kind of go, all right, well, that's motivation. Way more fun than money. Like, once you got that sorted, it's like, all right, how do we just get better and better? And that's why, Roger Federer got so much better because of Nadal. There was a second guy pushing him.
One thing I want to understand that you're doing is you seem to be someone who's been able to create systems fairly easily and then have a team kind of come in and manage it after you.
Yep.
This is something that most founders struggle with, is how to build a system that they can walk out of and go and create another system. Now, Michael E. Gerber has a great book about this called The E-Myth, and it really helps me in my business trying to understand that in order to grow a business, he had this notion that you need to hire about 5 people to replace yourself.
Yeah.
Not 1, but 5. What frameworks do you have that you've been able to leverage your team to come in and take over from you so you can move into the next venture?
So the obvious one is the operation manager. Have a really good ops person who drives things, and that's a pretty tough job too, because it's like you're fighting against costs and dealing with all the messy parts of the business. If you can find someone, especially if there's like salary to grow the business like yours, they're the most valuable asset.
So an ops manager is like the go-to.
No ops, but then you've got like a growth manager or a sales manager, something, GM, whatever you want to call it.
Someone who's like super commercial, and then someone who likes to fight the problems.
Yeah, so someone who can go out and generate.
So when you're looking for these people, what do you look for? What are the traits? What are the job titles? What are the things that every business owner who's trying to replace themselves should look for?
How do you find them? It's hard. They're unicorns themselves. And that's probably, I guess, the whole where the market is. Everyone's focused on creating your own business, but there's like a really good opportunity for like 2 ICs to do well, benefit off, individual guys like yourself doing things and then, come under the wing. You've got a head start and you might end up with equity in a different business like down the track, but like it's a running start into the chaotic world of entrepreneurship without having to take any of the financial risk yourself.
Okay. Do you think that some business owners can get too lazy? Like, let's say they've done well for a couple of years, they've got a good tailwinds, money's rolling in. Why risk it?
Nearly all do. It's like it's a stage of life. Like, people have their kids and then they've made their money. It's like, and then all the people you associate yourself with are doing even less. So it's like, oh, well, do I need to then create this next?
Oh,
it's like stage of life a lot. So you almost need, some young or hungry blood or, something to push that next level.
but I'm obsessed with people who have high agency, and you strike me as someone who's obsessed, enjoying the game, trying to find a new angle or a new way to do something. What about this is creating an obsession for you? And like, why are you taking so much high agency and trying to do all of this?
Maybe it's the perception. It's a lot harder, but like I'm making much bigger decisions quicker, taking more risks. So like, yeah, there's probably more of that rather than just grunt work, I guess. So, and that's one of the things I don't like the whole working hard, like you got to work smart, not hard. That's something I really kind of drilled down. So I'm not sitting there just doing things unless I know there's a direct impact. Like we're here today, you're a massive podcast. There's going to be benefit. We'll meet people out of this. People will reach out. Would you just do every podcast you get on? No chance. So you got to just like limit your time, and then I don't know. You enjoy your week. So as long as I enjoy it, I'll just keep back. I know it sounds really basic, but all these businesses I've created, I knew they would work. So it's like, why not? I don't know why. I don't know. There's nothing more fancy than that.
No, I love that about you, dude. You're looking at this like no brainer, like pretty straightforward. Let's make it happen.
Yeah.
And I think there's a confidence that you have that a lot of business owners don't have. Like it's honestly, dude, it's pretty rare for someone to be like, it's not a big deal, let's get after it.
So yeah, I don't know. It's within my scope of knowledge, so that's why it does feel so sure.
Yeah.
And even the renewables one, like there's no risk there. Even if there's no buyer at the end of the day, it's a cash flow machine. So
do you live with your businesses like truly believing, nope, it's pretty straightforward, it's pretty easy, and it's pretty fun?
Yeah, and even if it goes south, then you just have to put in a bit of effort, like to fix it. We launched a wealth creation business in terms of like financial advice and all that. And you think, all right, let's say no one wants the product. Then we've got to start talking about it. We've got to then start networking off the current leads. So you can fix the lead flow. Actually, that's a big part of my job, just working out where the leads need to go. So we tweak marketing for every business. Like New Zealand, we created the first commercial buyers agency there because there was no demand there, but there was no competitors. So we had to go in and educate the market and go, look, residential can be a bit shit from a cash flow point of view, but if you think about commercial. And I'd see the comments online and they're like, only invest in commercial if you want to go broke. Like they were so educated about it. Like there's no capital growth. They all go vacant for 3 years. Like, and you had to explain to them like, yeah, well, when's your local Woolworths gone broke? When's that industrial complex has got 0 vacancies in it? And then you start educating them. And now all of a sudden there's leads coming through every few hours in that area, and it's a small market. So there's still grunt work involved, but it's kind of more strategic marketing. And you just got to have a good product. And I think all of our jobs all companies have good products, so we'll always win through.
So sometimes you look at a market as like, I can improve it,
Yep.
I can make it more efficient. And other times you're like, I'm going to go in first. I'm going to create a demand
Yeah.
through education.
Yeah, and that's what we did for the international side of things.
When someone's trying to be first in the market and they know they have to educate a portion, does fear creep in for you? Or are you like, no, I've done my homework. I just got to get these people to wrap their head around it?
Yeah, the only thing I thought about is like, I wonder how long it'll take. So it's kind of just like an efforts game. Like, so yeah, again, you got to be financially ready to go, all right, I wonder how many months it's going to take for people to cotton on that this works. And it took about 3 months. So it wasn't bad, but we were used to instant results in Australia. And but yeah, I flew over there. We did seminars. We did all the usual stuff. Get people talking. Got in media articles, and now it's.
Dude, I love how easy you make it sound. Like, I'm like, how do I get involved? Like, you're making this sound super fun and reasonable.
Yeah.
I think that's a lot of businesses just trying to help people understand it. It's not this big, scary, crazy thing. Sometimes it's just taking complex stuff and breaking it down and making it palatable. I've really enjoyed talking to you about this. It's been a ton of fun. I think I'm just enjoying your journey. I've read through your story and what you've been able to accomplish in 10 years, and I'm super excited about what's around the corner for you with renewable energy. I worked in energy as a sales rep for a long time. It's a space that needs a shakeup, and there's a couple of people monopolizing the market. But it's been a ton of fun just unpacking some of this with you today and getting a better understanding as to how others can kind of think like this for themselves.
Yeah. No, I think the opportunity to start businesses are never been better. But just look at it from different viewpoints, and whether it's like working as a 2IC or going into the boring business type stuff, just be a little bit different to the masses. But yeah, play the percentages. That's the only thing I think about, how to not lose money by doing something so big and so out of your comfort zone. It's going to blow you up. Yeah, none of it's simple, and there's a lot of people that should stay as employees because that's going to be a safe bet if you're in the right job, because everyone wants to be an entrepreneur. But yeah, I don't know. The world's your oyster if you know how to look at it that way.
If people want to learn more about this, where should they go?
Obviously this podcast covered a huge amount, but just probably our website, rethinkgroup.com.au, you'll see all the breakdowns of the renewable energy business. We've got books on commercial property and stuff like that as well, so we can include all those.
Yeah, we'll put all the links in chat for anyone who wants to learn more about this or reach out to you. But genuinely, thank you so much for joining us. It's been a pleasure. We'd love to have you back.
No, really appreciate it. Great to be here.